All right, we are covering mutual funds and different type of mutual funds. So I want to go through the terms and the names of these funds because they can appear to be confusing or maybe boring in name. I want to make sure that you can understand and relate to the titles and what is within one so we can pick and choose the right type of mutual fund when we have different targets and goals for our investment strategies. So let's start with a balanced fund. So if we wanted to invest in stocks and bonds, then we would have a mixed or a balanced fund because this gives us access to both. And not only will it give us access to both, it'll be a balanced approach to both stocks and bonds. So that's what we're going to be able to get out of a balanced fund. Now, if we wanted to have access to a secure investment, but on an international scale, right? So if we wanted to be able to access international companies, but we wanted security, we want something that's stable, not something that's high risk, we have two options here. Would we look for a global, which is international, global? We would go into a bond fund or a stock fund. Well, if we went to a stock fund, it's going to give us a global stock fund that would give us international reach for international companies, but is that going to give us the security we're looking for? No. So what we want to do is we would go with a global bond fund, which gives us international access and it gives us security. Okay? Following in turn, a global stock fund gives us international access and also gives us access to growth, right? That does come with added risk, but this fund would be filled with international companies. Now, growth fund. If we wanted to put our money into a growth fund, then through a growth fund, we obviously are going to have not bonds, but we would have stocks. We have a greater room and greater space for growth. And then likely they might be stocks in smaller companies or startups, smaller companies that have more room to grow. If you have a behemoth like Coca-Cola, that may grow 2% or 3% annually because it's so big, there's only so much room for it to grow, versus a startup, a new company or an app that could double or triple in value. They're a lot smaller, but they could triple their growth. Then you're going to find companies like those inside this growth fund that will have stocks in it. An income fund. Well, what would we find inside of an income fund? Our goal is to have income produced by the fund itself. So when we invest in stocks, we're going to have growth. We're going to look for growth stocks, not bonds. But also we're going to look for companies and stocks that pay a dividend. And a dividend is when they have profits at the end of their quarter, exceeding what they were expecting. They pay the dividends back to their shareholders. So a lot of publicly traded companies pay a dividend back to their shareholders. Not all of them do. Some companies, as a matter of principle, will reinvest that money. So they're going to say, we have a surplus at this quarter and it's $4 million. We could give everyone a dividend of 12 cents, or we can reinvest the $4 million and make the company grow, which will ultimately help the price of your company, of your shares in the company go up as well. So if we were looking for income, then we're going to look for companies that are going to have dividends, right? That provide us with dividends and have growth in share price. And when we're talking about shares, we're talking about stocks, not bonds. So that's what will be inside there. An industry fund, we've covered this before, but an industry fund, if you're specific to, let's say, pharmaceuticals, or if you're specific to .coms, technology stocks, or if you're really familiar with artificial intelligence, then you can be very specific and you can target a mutual fund that has companies within there. You may not know how to pick the one winner, but you know that this sector overall, this industry is going to do really, really well, and you want to be in that. During the pandemic, an industry fund that's filled with restaurants, hotels, amusement parks, and cruise ships is not going to be doing well in the middle of a pandemic. These industries are suffering, including airlines. So that's an industry you'd want to stay away from if you need growth right away. But if you're looking to get into an industry fund that's undervalued and low, well, during the pandemic, you may find those good prices and expect growth to jump out if these industries are able to manage and be successful coming out of pandemic. So it has to do with your timing. It has to do with your goals, with your investing. Municipal bond fund. So municipal bond fund gives you an opportunity to invest and get a return on your bonds. You're going to get that bond rate, but also gives you a chance to have tax savings. So many municipal bonds have the added advantage of you not having to pay taxes on those returns. So if you want to put your money into an investment that's not going to be taxed, municipal bonds is a good place to put that money. And then regional stock fund. Well, if you wanted to put your money into bonds, then you're not going to look for a regional stock fund. You would look for a regional bond fund. But regional means that it's specific to a region. So if you wanted to invest in only North American countries or only South or Central American companies, and you want to invest in oil companies in Central America, then you can be very, very specific. These are the benefits of understanding and being able to break down and break through the names and titles of these different funds. On their face value, they may appear boring and lame, but they do guide you and give you the clues you need to help you with your investing goals. If you have questions, feel free to leave a comment.